Money saved is money earned. Hi, my name is Amit Grover, and today I will discuss about how you can save up to 46,800 rupees in taxes. Traditionally, investors invest in PPF, Public Provident Fund, NSE, National Savings Certificates, and insurance policies to save their taxes. These options are good, but they don't help you create wealth that is beat inflation over a longer period of time. If you're looking for an option where you have to save your taxes, but at the same time create wealth from a long-term perspective, ELSS is a very good option. Now, what is ELSS, you may ask? ELSS is basically an equity-linked savings scheme. It's basically an equity mutual fund managed by a fund manager and analyst who basically invest into well-researched stock ideas and sectors to create wealth over a longer period of time. To understand the returns of an ELSS, let's look at Nifty, which is a good proxy for ELSS. If you would have invested in Nifty 20 years back, that is on 1st Jan 2000, and if you would have looked at the value as of yesterday, which is 15th Feb 2021, in these 20 years approximately, 1 lakh rupee invested has become 13 lakhs 77,000 rupees approximately in 20 years, giving a compounded annual growth rate of 13.2%. This is the power of equity and equity mutual fund and Nifty to create wealth from a long-term perspective. Risk and return are the two sides of the same coin. We just talked about the return and how it can beat inflation, but it's also equity markets are risky and volatile. Example, 2008 market corrected by almost 54% because of global financial crisis. And at the same time, in March 2020, in such a small period, we saw, because of global pandemic fear, market correcting by 36%. This is the risk of equity markets. Now, generally people talk about what is an ideal time horizon in an ELSS. Should I redeem my money because the units are free for redemption after 3 years? Just because the units are available for redemption after 3 years doesn't mean your time horizon has to be 3 years. It's equity, it has got risk, so ideally your time horizon should be at least 7 years. And if you're looking for serious wealth creation, you should at least look for 15 years and more than that, like a PPF account. Now, you can invest into an ELSS in a lump sum format, or you can also do an SIP in an ELSS fund. Ideally, if you do an SIP of 12,500 rupees per month, let's say for 10 years, you have done your tax planning for next 10 years. Because systematically you are investing on an automated basis, you have done the complete tax planning. So to sum it up in a simple way, if you're looking at options which are safe, but at the same time which don't beat inflation, but they are safe, then PPF, NSE, insurance policies are good option. But if you're looking for an option which can create wealth, beat inflation, and at the same time save taxes, then ELSS is the best option. Stay invested, happy investing. Thank you.